I'm here with AlexOCrypto. We're going to talk about our trading rules. We're going to be going over a specific range that we really enjoy through Bitcoin's price action history that recently just happened before this crazy pump that we just had. So we're going to be looking between the month of December to February, talking about a range, talking about our trading rules and how our two strategies might actually kind of like work together cohesively, and how, other traders, how their strategies can get them very specific entries and communicate to them in a very specific way, but still provide them the same kind of trade direction that we normally would trade. So we'll see what happens. We're gonna go into the charts. I'm gonna share my screen, and then Alex is gonna share his screen over the same range, and we're gonna talk about what kind of rules we have and what kind of entries that we got. So,
Perfect.
all right. So I'm gonna share my screen here, man. So this is the range that we're talking about. If this is the hourly time frame that we're looking at, I usually look at the 15-minute time frame for my entries because it has the most amount of trader participants. So for what I mean by that is if I go to enter a trade, usually my strategy communicates to multiple strategies at the same time. And when I go to do my entry, where my confirmations come in, a lot of other traders are looking to enter at the same time. So most of my trades will have volume backing it and gets me out of my trade relatively quickly. Um, but my strategy usually comes with the risk of sacrificing some gains in order for that extra security that the market is going to go my direction. So what I look for is I'll pull a fixed range volume profile like this that you see in my screen here. And I'm going to look for, mostly I want to see a little bit of time in this area first before I make any concrete decisions on whether or not going to be entering a trade or not. So I want to see some price action development defining a range first. And what I mean by that is I think I need to see like at least 2 points of resistance and 1 point of support. And like if I draw it on my screen here, for example, we have these 2 points of resistance here, and we got about a couple points of support here. So we can kind of use this as a starting point of a range. And then I'm going to start pulling this fixed range volume profile that I have on my screen right here. Um, what about you, Alex? When it comes to like defining a range, is it the same kind of scenario, or do you look at historical data as well?
Well, for me, yeah, I totally agree with you. You have to have some confirmations of some highs and some lows, right? And once you've established that kind of area, then it's to see how price behaves. Like I think it's very important. Um, what we're looking at is we're looking at an uptrend coming into this area. We've had a big pump into this area. So it's okay, establishing the highs, but then waiting for the lows to establish as well. And when you have the lows established, then you can be like, okay, here's my range. Where's the middle of the range? Where's price going to move too quickly? And then understanding also like we're on an hourly time frame. So if we were to go back to the daily or anything like that, we could identify the larger trend is to the upside, right? So for me, it's like, okay, we've moved up, we've hit a certain kind of plateau, and now let's see where we find support. And that really gives me the idea of that, okay, we could be ranging from here until proven otherwise, right? Until we've really broken out of that range.
Yeah, exactly, man. And one thing I like to use to kind of help predetermine a range is using historical data with the visible range volume profile, which is like
Mm.
similar to the fixed range that we've got here, except when you have the visible range volume profile open, it will take all the data that you have on the candles that are displayed on your chart at that time. But if you like zoom out, it's going to readapt and change to the new existing candles on your chart. So I'll use that as a tool too to see like where we've had a lot of interest before in the past, and I can kind of predetermine where resistance and support will be once we get price action accepted
Absolutely.
in that area. Yeah.
Yeah, that makes sense. The VRVP is a great tool. Like you zoom out, you get onto that weekly chart. You can see from the previous bull market, right, where those key levels are going to be and where price is going to have a reaction on. And I think that's so crucial is to have like that big outlook, and then that'll allow you to identify where ranges are, where price is going to really stick, and then have trouble getting out of, right? Like that
Yeah.
VRVP will kind of give you like a very big shelf of like, okay, it's going to take some momentum to get out of this range. And that's exactly what happened here. It took quite a bit of momentum to eventually break through.
All right, cool. And then once I establish a range, Really what I'm looking for when it comes to like looking for a long or a short is where price action is within the value area. So if we're like in the value area low, most people are thinking bearish, but we're actually looking for a long opportunity in this kind of zone. And for me, I like to use the 15-minute time frame, but we're just going to use the hourly just for simplicity. I will see if price action got below the value area low, and there is a lower time frame reversal structure and a break of downtrending momentum, similar to what we got drawn right here. This is the form of downtrending momentum. There is like downtrending momentum here, and there's some evolving right here. But basically, when price action dips down below this area, I'm preparing for long, and once I get the change of character, I'll enter the long after the break of the momentum here. So after that point, I'm going to be watching the point of control as a form of resistance because that's where the most traded volume is. That's where most of the money is exchanging. So we prepare for support and resistance in that area. But my target is usually the value area high. So I'll aim for the value area high, but I'll be aware of any barriers along the way up if I have to get out. So my rules are actually relatively simple in that sense. I will look for just, yeah, break of downtrending momentum, a change of character, any reversal structures, and I want to see price action dip down below the value area low before thinking about entering a long. And the opposite's true for a short. So if we have this uptrending momentum here, we hit the value area high, it's acting as resistance. And then all I got to wait for is that change of character. We can see right here, for example, we had this this kind of slightly uptrending support level. So I'll just wait for that to break, and then I'll target the value area low. One thing I'll also use momentum for as well as a guide to tell me when to get out if we're not going to hit the value area low as my target. Every
Yeah,
little
that's such a
structure,
good tool. Like, I mean,
yeah,
you showed me that, and like it's really allowed me to hold my trades longer. And that's very key, is like tracking that momentum in either direction, right? And knowing like, okay, there's going to be retraces, price doesn't go in a straight line. So I think you sharing that's so important for people to understand how useful that is, because once you get into a position, then the mindset comes in, and it's like, how long do I hold
yeah. How
this,
do you
and
control that? Yeah.
how do I maximize my profits? Because we want to have that higher R value where we're bringing in, you know, a 3-to-1 ratio, and if we're not holding the trades that long, then our losses are going to do a lot more damage to our accounts over time.
Yeah, exactly. You can have a target of a 1-to-2 or 1-to-3 or 1-to-4 risk to reward ratio, but if you can't take action on that and be consistent with actually taking profits at those ratios, then your loss could dramatically outweigh your wins. And
Absolutely.
yeah, then it's like all that planning is for nothing. So yeah,
Yeah.
downtrending momentum, for example, if I were in a short here at any point, after maybe let's say you were looking at the loss of this macro support level here and you enter a short, this downtrending momentum keeps your head on straight, saying, okay, we went all the way down here. You could have taken profits at this support level, but this is your last straw. Like if you don't get out here, things could dramatically go against you, and it's time to get out. And that's exactly what happened when we broke this. So you could have, yeah, used that as your last warning sign. Maybe your final TP, because some people take profits along the way. It depends on how you manage your risk. Like some people, for example, will close half their trade at their 1-to-1 to eliminate risk in their trades. But I wouldn't recommend doing that unless you have a win rate of above 50%, or else mathematically, even with that kind of risk management, you could come out losing. Do you want
Absolutely.
to share your screen on how you would go through this, or do you want to control mine?
I can share my screen. Of course, I'm up and ready to go. So
Sweet.
let's
All
go
right, cool,
over
man.
to mine, and we can definitely do that. So you just
Oh, I
need
gotta make
to
sure you can see it. There you go.
enable
Now you
it.
can do
Yeah,
it. Yeah.
perfect. We're good. Da, da, da. Okay, so
So colorful, man. I feel like I'm in like the Ninja Turtles like cartoon right now. Yeah.
I just threw a bunch of verticals on like areas, like just looking at the 1 hour of where I would look to trade, because we've identified the range, the 3 lines, that's the point of control. I do exactly the same as you, is that I'll pull, as soon as I get that established high and lows, I'll pull the fixed range volume profile and get that idea initially. And then as we continue on, I'll pull that further and further and further and get those key levels of support and resistance and where I'm looking for possible longs and possible shorts. Like you said, you have to have a contrarian point of view when it comes to something like this. When we're falling down, we got to look to buy. When we're going up, we got to look to sell, right? So it's that kind of idea as well. Is that's definitely one of my rules too, where I'm looking to buy and sell opposite to what the market is doing, right? And I think that's what creates profits. Is there a noise coming through my mic?
Nope, you're good, man. Sounds clean.
Okay. So now I've identified areas where I would look for trades. So I'm going to go into the 15 because I'm very much like you. I'm intraday, so I'm pretty quick in and out of my moves. So that's why I threw all the verticals, so I can go into these while scrolling back through my chart. On the
That's
15,
smart.
because it definitely sometimes it takes time to find it. So we
You're
zoom
going
out
down.
and
We're at the 40K level now.
oh, I
39,
went too far.
37.
Okay, so here we are. So these are just areas where I would be looking for trades and how I could identify when price is coming. And as you have taught me, we can track momentum coming down here.
Yeah.
And for me, I do get a little bit earlier entries, and it's not to say that it's probably more risky, but for me, I'm always looking for divergences on Market Cipher, right? So I follow money as well on Market Cipher, so I can see that we are slowly coming out, but I've always looked for the curvature of coming back into the market. So this gives me the reversal signal, pretty much right here, like where you would find the break. But then I see lower lows here and then higher highs down here, right? So for me, that's my entry signal. So it's a signal. It's not like I'm not waiting to just jump in here. I'm waiting for the reversal. So this is my entry signal. I get the bearish or the bullish divergence. So I'm looking for the re-entry, right? And for me, it's pulling a fib, right? So I would pull a fib to swing high to swing low and look at the golden pocket bounce, right? I'm always targeting 786 golden pocket bounces. So for me, this would have been a perfect entry setup here where I'm looking to ride this.
Okay. So that's a lot to do with with Elliott wave theory as well, if you're familiar with that. So it's like herd mentality, like you're jumping in while the race has already started, but you're getting in still at a very good low before the bigger move comes in. That's pretty neat.
Yeah. So yeah, and it's all based on like except like identifying the divergence in the price coming down and then getting the retest, right? I'm not necessarily jumping in here, but it's like, okay, money's coming out. Here's the divergence. Let's look if we make a higher low, right? And that's
so similar, like about how I was talking about the value area low acting as a warning sign to prepare to enter for a long. But so like that's what you use as your like get ready kind of.
Yeah, that's my like, okay, pay attention. Yeah, exactly, right?
Perfect, man.
Same with here, like when we're coming up here, you can track this momentum like you showed me. Set it to the momentum tracking, man. Man, you like you saved me so much. You've made me a lot of money, man. I appreciate you so much. It's so awesome how we can share knowledge and actually grow with one another, right? So you can see the money comes out of the market, same kind of deal here. Now it didn't get a divergence, so I wouldn't have taken this trade here, right? So for me, that's a no trade, but we can see that we did get bearish divergence. There's actually a scam with here. So for me, this would already be invalidated. Like I'm not really looking to trade something like this. So identifying the range is so important, especially when we can identify that this is the point of control, right? So this is very choppy and very sideways, right? There's not a lot of price action, not to what we're used to recently with this massive move on Bitcoin and these 1000% moves, but you can definitely see where we can look for setup. Some of these ranges were hard to trade, right? So you can look, this was a bearish divergence on the 1 hour that I marked out. So you can use this kind of thought pattern as well, where you're identifying bearish divergence and then looking to take that trade back down, right? So this was when you're above the value area high, so you're looking for a short, right? You get a major bearish divergence and then the trickle down, and then the dump, right? So it's
Yeah.
identifying those moves and really being patient. I think is the key with any one strategy is knowing, okay, here's the time to act. Until then, you're on your hands, right? And I
Yeah,
think
just relax. Stop like
you
overtrading people. Yeah.
yeah, because
Just wait till
you
your
stress
rules are
that a
set.
lot too, is that you may miss a bunch of trades, but the ones you do take, you make your money, right?
Yeah. And the good thing about Bitcoin is like it's so volatile. You're having opportunities almost every single day. So
Yes,
it's a lot of people stress about trying to make the money now. When really, if they just like follow the rules, they'll get that money much faster than breaking the rules and losing money along their, way trying to get there. So like,
absolutely,
yeah,
absolutely. I think it's a lot of people, like a lot of us are guilty of this, higher high here, low, where we want to get into a market and instantly be, making thousands and thousands of dollars, and that's just not a realistic target. And I mean, if you, I actually back checked my trading from like it's 3 or 4 months ago, and I was trading like 3, 4 times a day, and like just intraday scalping ranges, and I
yeah.
realized that if I just took 2 trades a day, my profits would have been through the roof. My
I
first two
I
trades.
100% agree with that. Because like
Right.
what I'll do is I'll chart like 10 assets in the morning, and
Hmm.
I might find like 5 or 6 opportunities, but I'll only pick 1 or 2 of them, with the one with the least amount of drawdown risk for your stop loss. Like the market's always going to suggest a stop loss somewhere. And if it doesn't, you shouldn't be taking the trade. And the one with the least amount of barriers towards its target. So I'll take the one with the least drawdown, least amount of barriers to target. So I don't need to be picking or combating my way through the market to try to get the money that I want to make for the day. I just like pick the easiest thing I can get. It's not a competition. You're just here to try to make an income, and this is,
Absolutely.
trading is one of the best things about it is the amount of freedom that you get from it too. So if you,
Absolutely. That's
yeah,
why we develop the skills, we obsess over these things, and we end up building a life for us and our families, right? Like I mean, when we're outside, and I think this is another good point, is that when you're outside of these value area lows and value area highs, right? You can really target right back to the point of control, and it's typically bang on, like
yeah,
almost like a
yeah,
guaranteed trade, right? Where you're taking any kind of short outside of this range, and you're coming back here, right? Like you're coming back here early. So for me, it's like identifying the range is very important, and then where you are in the range. I always mention to my community, it's like ask where you're at, because like when you come to the charts, pretend you're lost, right? And you got to ask yourself, where am I right now? And by doing that, you can kind of isolate where you are in the trading world. Like, okay, so I go from the daily and I break it down every single day, and then I'm in the hourly. So I have a general outlook, and then now I can hone down and get into a trade for
yeah.
that day.
Dissect everything on the 15-minute or even lower. Some
Exactly.
people go as low as like 3 or 1 minute, but yeah,
Hmm.
15's all I need. But yeah, man,
Yeah.
that's perfect. And like you said with the point of control, like if you find that the point of control is like way too close to your face when you're about to enter a trade, then that kind of helps manage your risk and saying that this might not be a good idea and just step out.
Yeah.
Um,
Another free tool that I do use though quite often is the VWAP. So like
VWAP,
I'll
yeah,
throw VWAP on, and that just gives me an indication of where price wants to come back to, right? It's volume weighted average price, but when I'm on the 15, when price is getting away, it typically wants to come back, and it does snap every day, so it does give you that
yeah,
average for the day.
it'll
But if
reset
you're
once the daily candle closes. Yeah,
yeah, yeah, reset. So it'll snap back and reset, like you can see here. But then you can see we're staying above the VWAP, above the VWAP, comes touches the point of control. That's probably a trade right here, right? Rejection coming back down, right? Back to the value area low. That looks like a bullish divergence, right? Comes away, quick move up, but then eventually returns to it, right, on that day. So the VWAP is a good tool to track the way price is behaving throughout the day, and when it breaks farther away, it typically wants to return to it, and I use
yeah.
that to my advantage quite often.
And if you're someone who has just entered a trade recently and the date, like it was right before the daily candle closed, for example, I would
Mhm.
watch the charts and see how the VWAP adapted to that because it could bite your butt pretty hard when it just
Absolutely.
all of a sudden the VWAP is below the price action and it can act as support and causes like a reversal against you. So just watch that VWAP reset when you're trading, because you can see like that double bottom, for example. That's a perfect example. It reset there, came
Yeah.
right down, and then
And
it just
boom,
was able to
right?
quickly act as support. Price action didn't need to keep kept like try to catch back up anymore, and was able to act as support relatively quickly. And that double bottom reversal got that really good volume behind it because of it.
Yeah.
Um,
No, that's awesome. That's a good example, exactly, right? And then even here, double
yeah,
top, right? Double top
exactly.
moves away, flies away, right?
You can tell where it resets just from like the sharpness of the VWAP move.
Yes,
It's
exactly. Right
yeah,
here, right here. That's
yeah,
great.
perfect. Yeah, yeah. Yesterday was actually a good example. When I entered that short, the
Yeah, you
VWAP
took an
reset.
amazing short,
Yeah,
man. That was a great trade, brother. That was a great trade.
VWAP reset, acted as support. We broke down turning momentum, got change of characters. Like, yeah, time to get out. And then it pumped up to 70K. So yeah, being aware of those things, it's good
It's
to
so
know to get out.
important.
Yeah,
Absolutely. And it's identifying what kind of trader you are. I think like for me, I'm in and out of the trades. Like I come in, I make my money and I leave, right? Some people can hold
yeah,
trades longer and that's great. For me, I just know myself, right? And I think knowing yourself, like if you don't want to be on the charts all the time, maybe swing trading is your thing. And there's multiple things that you can add to that, right? And then the free tools and stuff, like most tools, I do use Market Cipher, but every other tool I use is free, right? VWAP volume, support and resistance, fixed range volume, right? And I can create a plan, right? And having a plan is always the best when trading a range, right?
100%.
Identifying those range, making sure that you're
And
using good risk management and executing.
yeah, and you, as a day trader, you essentially become the asset, and you're just compounding your growth for all your trades that you close. So, for example, you can do like 3 small trades in a day, and it'll equate to the same amount as like someone in a swing trade over like the next 3 or 4 days. So yeah, it really depends on your personality and what kind of a trader you want to become. If you're a busy guy, swing trader might be for you. If you're someone who has a little bit of free time once in a while, and you want to dedicate your time to the charts, set your alarms. But yeah, the better you are at setting your alarms, the less time you'll stare at the screen. Like you can be someone who stares at the screen for like 4 or 5 hours, or you can be someone that looks at it for like 30 minutes, set your alarms, and then wait till the market calls you to the charts with those alarms.
Exactly.
Yeah, there's a lot of people need to practice that because they're getting like mental fatigue just staring at the charts all day. But yeah, man, I think that's pretty much it. Like I really appreciate you jumping on here. I know you got another call to jump on to like right after this. You got a busy day.
Crazy day.
So this is yeah, yeah.
That's okay.
All right, man.
Thank you
Thank you
so
a lot
much
for
for
jumping
having me
on.
on,
This
man.
is AlexOCrypto. I'm gonna have the link down below in the description below so you can check him out.
Yeah, and I'll make sure to share it out to my community too, man. You're a big part of our community too. So thank you for having me on,
Dude,
man.
I
Anything
love
for you,
your
bro.
community. They're all super freaking nice. So yeah, help them as much as I can. Yeah, help. There's some things I'm learning too from that community. So that's pretty awesome. All right, guys. You have an awesome day. Please subscribe. I know like 20, about
Smash that
15% of
like
you.
button, subscribe.
Yeah,
Let's go, guys. Come on, this guy's bringing you guys so
yeah,
much
yeah.
knowledge.
What he
Profitable
said.
trader, man's got it. All right.
All right. Thanks, guys.
Yo, I'm all about the crypto. In case you don't know, it's the hedge to inflation, the craziest sweep on the nation. No baby, every blockchain ain't created the same, but the learning curve feels like a bullet to the brain. Let me enlighten you, let me enlighten you. React to the max and what's under